This episode was produced using AI-generated voices and scripting. Okay, so here's what's been bugging me all week. We've spent 2 years treating OpenAI's valuation like it's this untouchable number, like it exists in its own gravitational field. And now suddenly there's a comparable, like an actual comparable. And it's not good news for the bull case.
It's worse than not good news. It's the first time anyone can do real math on this instead of just vibes and Sam Altman interviews. Anthropic's revenue numbers are leaking out, and they're growing insanely fast. And the thing is, that should scare OpenAI investors, not reassure them.
Okay, but hang on. Why? If the whole sector's growing, doesn't a rising tide lift all boats? Isn't Anthropic doing well just proof that the market's massive?
That's not what's happening. The rising tide argument only works if you assume the pie is infinite or if the leader has some kind of structural lock-in, and OpenAI doesn't. What Anthropic's trajectory actually shows is that enterprise customers are splitting their spend, switching models quarter to quarter, running benchmarks, and going with whoever's cheapest or best that month. That's a commodity dynamic, not a platform dynamic.
A commodity dynamic at $300 billion.
300 plus billion. The tender offer reportedly values them above that. And look, Anthropic is reportedly on a run rate approaching 2 billion, maybe higher now, growing triple digits year over year. That's incredible. But if you apply comparable multiples from Anthropic's own fundraising rounds to OpenAI's revenue, you don't get to 300 billion. You get to something significantly lower unless you assume OpenAI grows into this completely dominant monopoly position that, and nobody's saying this, the Anthropic numbers directly contradict.
So the argument is basically, thank you Anthropic for finally giving us a ruler to measure OpenAI against, and the measurement is bad.
The measurement is clarifying. Bad depends on who you are. If you're Anthropic, you're thrilled because you've just demonstrated that being number 2 in this market is an extremely lucrative place to be, and you can grow just as fast or faster from a smaller base. If you're an OpenAI investor who bought in at the latest round, you should be asking some hard questions about what exactly you're paying a premium for.
Brand? ChatGPT's brand recognition is massive. My mom knows what ChatGPT is. She does not know what Claude is.
Your mom is not an enterprise procurement officer.
Fair.
Consumer brand matters for the consumer product, sure. But the revenue that justifies a $300 billion valuation isn't coming from $20 a month ChatGPT subscriptions. It's coming from API revenue, enterprise contracts, the stuff where Anthropic is eating their lunch. And in enterprise, brand loyalty lasts exactly as long as the next benchmark.
That's the whole game right there. So let me push back though. OpenAI has the Microsoft relationship. That's not nothing. That's distribution at a scale Anthropic can't match.
It's not nothing, but it's also not what people think it is. Microsoft is OpenAI's biggest investor and distribution partner. But Microsoft is also, and this is the part that kills me, Microsoft is also hedging. They've invested in Mistral. They're building their own smaller models. They made it very clear that Azure will be a multi-model platform. So even your biggest ally is building optionality away from you. That's not a moat. That's a
life raft with multiple doors.
I was gonna say something less poetic, but sure.
Okay, so here's what I don't understand. The people buying into OpenAI at these valuations, we're talking Tiger Global, Thrive, SoftBank now reportedly, these are not dumb people. They've seen the Anthropic numbers. They have better data than we do. So either they know something we don't, or there's a different logic operating here entirely.
It's the second one. And the logic is actually pretty simple once you see it. At this level of venture investing, the game isn't about whether the valuation is correct today. It's about whether you can get allocation to what might be the most important company of the next decade. The actual number is almost irrelevant to them because they're not doing a DCF model. They're paying for optionality on artificial general intelligence, whatever that means.
So it's a lottery ticket.
It's a very expensive lottery ticket bought by people who can afford to lose it. And the problem is that trickles down. When SoftBank pays $300 billion, that becomes the anchor for every downstream valuation in AI. It becomes the number that every Series B founder points to when they're raising at an insane multiple. It distorts the entire market.
Which, honestly, that feels like something we've seen before.
Multiple times. And every time the argument is, this time is different because the technology is real. And the technology is real. Nobody's disputing that. The question is whether the technology is real automatically means this specific company at this specific price is a good investment. Those are completely different statements, and people keep collapsing them into one.
Let me throw something at you that might be counterintuitive. What if Anthropic's growth actually does justify OpenAI's valuation? Not directly, but because it proves the market is so big that even the number two player is growing this fast. Like, if Anthropic can do 2 billion, maybe OpenAI really is doing 5, 6, 7 billion, and at that scale, 300 billion is aggressive but not insane?
So OpenAI's reported $5 billion in annualized revenue. The information's had various numbers out there. Let's be generous and say 5. At 300 billion, that's a 60x revenue multiple. Anthropic's last round valued them at what, 18 billion? If they're at 2 billion in revenue, that's a 9x multiple. Explain to me why OpenAI deserves nearly 7 times the revenue multiple of its closest competitor.
Market leadership premium?
In a market that's 18 months old, where the number 2 player is growing faster than you. Some premium, sure. 7x the multiple? Come on.
When you put the actual numbers side by side like that, it does look pretty stark.
And it's even worse than the raw multiple suggests because of where the growth is coming from. Anthropic's growth is disproportionately enterprise and API, which is higher margin, stickier, and more predictable than consumer subscriptions. So not only is the multiple gap absurd, the quality of Anthropic's revenue might actually be better.
Wait, seriously? You think Anthropic's revenue quality is better than OpenAI's?
I think it's at least as good. Look at who's building on Claude. Amazon, Notion, DuckDuckGo, a huge chunk of the enterprise stack. OpenAI has more consumer revenue, which is great for headlines but terrible for predictability. A consumer can cancel a $20 subscription in 30 seconds. An enterprise API integration takes months to rip out.
Okay, but then here's the counter. OpenAI is clearly trying to become more than just an API and a chatbot. They've got the app ecosystem play, the plugins thing. Well, the plugins thing kind of died, but they're trying to build a platform. Anthropic isn't really doing that. They're an API company. Isn't the platform premium real?
What platform? Name me one successful platform play OpenAI has executed. The GPT store? That was supposed to be the App Store moment, and it landed with a thud. Custom GPTs are a feature, not a platform. The plugin ecosystem they had to basically abandon. I keep hearing platform used as a magic word that's supposed to justify the valuation gap. And every time I ask what the actual platform is, I get hand-waving about the future.
I mean, that's kind of a fair hit.
It's not a hit. It's just what happened. The GPT store launched, nobody talked about it after a week, and the company pivoted to the next thing. Which is fine. Pivoting is fine. But you don't get to charge a platform multiple for a pivot.
So, who does the current valuation actually help? Like, who benefits from OpenAI being priced at 300 billion?
Early investors and employees who want liquidity, obviously. Microsoft's equity position looks fantastic on paper. And frankly, Sam Altman's negotiating position. When you're valued at 300 billion, you can attract talent, you can do deals, you can raise debt, you have gravitational pull. The valuation itself becomes a strategic asset regardless of whether it's accurate.
The valuation as a product? I like that.
It's literally the most important product they have right now, and I'm only half joking.
Okay, so let me flip this entirely. What if, and hear me out, what if the Anthropic revenue numbers leaking is actually strategic? Like, what if Anthropic wants these numbers out there specifically to create this comparison?
Now that's interesting. Because Anthropic is raising too, right? They're always raising. And if you're Anthropic and you're about to go raise your next round, you want the narrative to be, we're growing as fast as OpenAI at a fraction of the valuation. That's the most compelling fundraising pitch in the world. You're basically saying we're the value play in AGI.
The value play in AGI. That's a sentence that should not exist.
Welcome to 2025. But seriously, there's game theory here. Every time Anthropic's numbers get reported, it implicitly asks the question, why is OpenAI worth so much more? And that question benefits Anthropic's fundraising and recruiting more than almost anything else they could do.
You said something earlier about quantity dynamics. I want to come back to that because I think it's actually the scariest part of this whole thing. If the underlying models are becoming commoditized, that's bad for everyone's valuation, not just OpenAI's.
Right, and this is where I'll actually push back on my own framing a little. I said commodity, but it's more nuanced than that. It's commoditized at the frontier for the moment, but the frontier keeps moving. So every 6 months, there's a new capability that only one or two players can deliver, and that creates a temporary moat. The problem is the word temporary. You can't build a $300 billion valuation on temporary moats that last 2 quarters each,
Unless you're always the one at the frontier.
which OpenAI was for about 18 months. And now they're not, or at least it's contested. Claude Sonnet is better than GPT-4o on a bunch of coding benchmarks. Gemini is better on multimodal stuff. The frontier used to be OpenAI's zip code, and now it's a crowded neighborhood.
Okay, but hang on. There's a counter argument I haven't heard you address. OpenAI has more users, more data, more feedback loops. The flywheel argument. More users means more data, means better models, means more users. Doesn't that compound over time in a way that justifies paying up now?
The flywheel argument is the single most overstated thing in all of AI investing right now. It sounds beautiful in theory, and there's almost no evidence it's working in practice. OpenAI has had hundreds of millions of users for over a year. If the data flywheel was this unstoppable force, it should be pulling away from everyone. Instead, Anthropic trained Claude on its own data and synthetic data, and competitive benchmarks show them neck and neck. The flywheel is either very slow, very weak, or not real.
Yeah, that's a genuinely good point. The proof should be in the product, and the gap isn't widening.
It might actually be narrowing, depending on which benchmarks you trust. And nobody's saying this clearly enough. The flywheel doesn't work. If more users don't translate into meaningfully better models, then OpenAI's consumer advantage is just a customer acquisition cost advantage, which is valuable, but it's not a $300 billion technology moat. It's a marketing lead.
A marketing lead. Sam Altman did not raise $100 billion in compute to have a marketing lead.
And that's the other piece of this. The CapEx numbers are genuinely terrifying when you put them next to actual revenue. OpenAI, Microsoft, all of them are spending tens of billions on compute infrastructure. Anthropic too, through the Amazon deal, but Anthropic's raising and spending at a scale that only makes sense if they become the dominant platform. Second place doesn't justify that spend.
So it's not even just about the valuation being wrong. It's that the entire cost structure requires a monopoly outcome to make sense.
Exactly that. And the Anthropic numbers are the first concrete proof that a monopoly outcome is off the table. You don't get a monopoly when your competitor is doubling revenue every few months and winning enterprise deals.
Let me play the OpenAI bull one more time because I want to steel man this. What about the for-profit conversion? OpenAI's restructuring, potentially becoming a fully for-profit company. That unlocks a different investor base, potentially an IPO, a different set of financial tools. Doesn't that structural change justify some premium?
It justifies a structural clarity premium. Sure, knowing you own equity in a real company instead of whatever that cap profit thing was, that's worth something. But it's not worth a 6 or 7x multiple premium over your closest competitor. And honestly, the for-profit conversion is as much a red flag as it is a catalyst. It tells you that the original structure couldn't contain the amount of capital they need to raise, which means the capital requirements are even bigger than people thought.
Who does that actually help? Like, is the for-profit conversion good for anyone besides the people already holding the equity?
It helps future institutional investors who want clean cap table economics. It helps the IPO bankers who will make enormous fees. It probably hurts the nonprofit mission that OpenAI was supposedly founded on. But I think
I think that ship sailed a while ago.
like 2 years ago, yeah.
Okay, so let me ask you this directly. If you had to put a number on it, if you had to say what OpenAI is actually worth using Anthropic as the comparable, what do you get?
I hate this question because any number I give is going to sound specific and the reality isn't specific. But okay, fine. If Anthropic at 2 billion in revenue is worth roughly 18 to 20 billion, then OpenAI at 5 billion in revenue should trade at some premium for scale and brand and the Microsoft relationship. You're maybe looking at 50 to 80 billion, generously. Call it 100 billion if you want to be really generous about the consumer moat. You are not looking at 300.
So you think it's overvalued by 3x at minimum?
At minimum, using the comps that now exist. And the key phrase is that now exist. 6 months ago, you could argue there were no comps. It's a unique asset. You can't price it traditionally. That argument is gone now. Anthropic killed it just by existing at this scale.
There's something kind of poetic about that. Anthropic was founded by people who left OpenAI, And now Anthropic's mere existence is the thing that undermines OpenAI's valuation story.
It's not poetic, it's predictable. When your top researchers leave and start a competitor, and that competitor gets to near parity in 2 years, that tells you something very important about where the value actually sits. It sits in the talent, not in the institution. The talent moves.
You said something earlier. Wait, you said the valuation is OpenAI's most important product. If the valuation corrects, like meaningfully corrects, does that create a death spiral? Harder to recruit, harder to raise, talent leaves for Anthropic or Google, which makes the product worse, which
I don't think death spiral. OpenAI has real revenue, real products, real customers. They're not going to zero, but a valuation correction creates what I call a gravity event. Suddenly, the comp packages are less attractive, the equity refreshers don't hit the same way, and yeah, people start taking calls from Anthropic and Google DeepMind and Meta. We've already seen senior departures. Ilya leaving was the canary, and since then, it's been a steady drip.
and the irony is that every person who leaves and succeeds somewhere else further proves your point about the value being in the talent.
Which further undermines the institutional valuation. Yes, it's a loop, but it's a slow loop, not a sudden collapse.
Let me throw one more thing on the table. Google. We keep talking about Anthropic as the comp, but Gemini is right there too, and Google can subsidize AI at a loss for a decade without blinking.
Google is the elephant in every room in AI, and everyone keeps pretending they're not there because the narrative is more fun if it's a startup versus startup story. Google has more compute, more data, more distribution through search and Android and cloud, and they've shown with Gemini that they can produce frontier models. If you're worried about OpenAI's moat against Anthropic, you should be terrified about their moat against Google,
And Google's AI revenue just gets buried in the cloud numbers, so nobody even talks about it.
right? Because it's a rounding error for Alphabet, which is the whole point. For Google, AI spending is a cost of doing business. For OpenAI, it's existential. That asymmetry is brutal and it gets worse every year the spending escalates.
Okay, so where does this all land? Not in a neat bow way, but if you're right that OpenAI's valuation is mispriced, what actually happens? Does the market correct? Does it just keep going?
Private markets can stay irrational way longer than public markets because there's no mechanism to short OpenAI. There's no daily price discovery. So the correction probably doesn't happen until the IPO, or until they have to raise again in a flat or down round, which, given the burn rate, might come sooner than people expect. The actual number is probably 18 to 24 months before the math becomes undeniable,
Unless they IPO first and make it the public market's problem.
which is absolutely the play. Get to the public markets before the narrative shifts. Let retail investors absorb the premium and let the early investors get their exit. That's not cynical, it's just how this works.
It's a little cynical.
It's a lot cynical, but I didn't design the system.
So the bottom line, and I know you hate bottom lines, is that Anthropic accidentally became the most important data point in AI valuation just by publishing their revenue growth.
Not accidentally, but yes. For the first time, we have a real comp for OpenAI, and the comp says the emperor is, I won't say naked, but he's definitely overdressed for the occasion. The growth is real, the technology is real, but 300 billion assumes an outcome that the competitive landscape is actively preventing. Anthropic's numbers prove that.
Overdressed for the occasion. That's going on a t-shirt.
Please don't.
Already texting the printer. All right, I think that's the show.
That's the show.